All right, let's jump right in. Today, we're looking at this really fascinating financial strategy. It's something that a whole new class of wealthy people are using to, well, live their dreams without ever having to touch their most valuable asset. Seriously, it's a playbook that's being written as we speak, and it might just completely change how you and I think about wealth. So, at the very heart of this whole thing is this core belief. It's almost like a religious principle in the Bitcoin community. Rule number one, the most important rule: you just do not sell your Bitcoin, ever. You hold on for dear life because you believe in its long-term potential as the ultimate way to save.
Okay, but that immediately brings up the million-dollar question, right? And I mean that literally. If all your wealth is tied up in this thing you've sworn you'll never ever sell, how do you actually use it? How do you buy a house, a car? You can't live in your Bitcoin, you can't drive it. So what's the move? How do you connect that digital wealth to your actual real-world life?
So, here's our game plan for today. We're going to start with this idea of being Bitcoin rich, cash poor. Then we'll dive into the classic playbook of the super rich: buy, borrow, die. After that, we'll see how this whole strategy unlocks Bitcoin wealth, look at exactly how these loans work, and finally, we'll explore what it actually means to live on a Bitcoin standard.
All right, first up, let's really get into this core problem, this whole dilemma of being Bitcoin rich but cash poor.
What's so wild about this new group of wealthy people is that their financial profile looks nothing like what we're used to. I'm talking about people with super high net worths, like millions of dollars, but their yearly income, it can be shockingly low. See, their wealth didn't come from some fancy, high-paying job. It came from just consistently saving in an asset that's been going up in value. And this brings me to a perfect and true story. It's about a school teacher. This person makes less than 100 grand a year. But by just taking a little bit of that income and putting it into Bitcoin, year after year for the last decade, they've now got a net worth of over $10 million. Think about that. It just completely flips the old school idea of how you build wealth right on its head.
But, and this is a big but, this new kind of wealth comes with a huge problem. Take another story: a construction worker, also a Bitcoin multimillionaire. He wanted to buy his dream house. So he walks into a bank to get a mortgage. And you know what they told him? They basically said his wealth didn't count. It wasn't real. To the old financial system, it was like he had nothing. He literally said he felt like a total outcast. Imagine that, a millionaire on paper, but completely shut out of the system.
So, what do you do? How do you solve a problem like this? Well, the answer, and this is the ironic part, comes from a playbook that the super rich have been using for decades with things like stocks and real estate. It's a strategy called buy, borrow, die.
Yeah, buy, borrow, die. Sounds a little dramatic, but it's simple and unbelievably powerful. Here's how it works. Step 1, you buy an asset that you think is going to grow in value over time. Step 2, when you need cash, you don't sell it, no way. You borrow against it. This gets you the money you need without having to pay a dime in taxes. And step 3, you hold that asset until you die, and then you pass it on to your family. And here's the kicker: they often inherit it in a way that legally wipes the slate clean on the cost basis, meaning that massive capital gains tax bill can just disappear. It's genius.
And if you want a perfect modern example of just how powerful this is, look at Mackenzie Scott, Jeff Bezos' ex-wife. After the divorce, she got billions in Amazon stock, and she has been giving away billions, incredible amounts of money. And yet, her net worth is actually higher today than it was right after she got the stock. How is that even possible? It's because her Amazon stock grew faster than she could possibly give the money away. That right there is the power of holding on to a great asset. Okay, so now you can probably see where this is going. We're seeing this classic old money strategy being perfectly adapted for the digital age, with Bitcoin taking center stage as that core asset. So let's just lay it out, side by side. What's the better move, selling or borrowing? If you sell your Bitcoin, bam, you're hit with capital gains taxes immediately. You lose out on all the future growth, and you don't own it anymore. But if you borrow against it, you get the cash you need with zero tax consequences. You keep all the potential future upside, and you still own your Bitcoin. When you look at it like that, the choice is kind of obvious, isn't it? And listen, this isn't just about the numbers. It's not just a cold, hard financial calculation. There's a huge psychological piece to this too. By borrowing, you stay aligned with Bitcoin's success. You avoid that gut-wrenching feeling of regret. The one where you sell, and then the very next week, the price skyrockets. By borrowing, you stay in the game. You're still part of the story. Okay, so how does this actually work? Like, what are the nuts and bolts of it? Let's get into the mechanics of using a digital asset like Bitcoin as collateral for a loan. It all boils down to this one key idea, loan to value, or LTV. It's just the size of your loan compared to how much your collateral is worth. Let's make it super simple. Say you put up $100,000 worth of Bitcoin and you take out a $50,000 loan. Your LTV is 50%. That's pretty safe. But we all know Bitcoin's price can swing wildly. So if the value of your Bitcoin drops to, say, $80,000, your LTV shoots up. Now you might get a margin call, a warning. And if it drops even further, maybe to 65,000, you risk liquidation, where the system automatically sells some of your Bitcoin to pay back the loan. It's all designed to protect the lender, but it's what lets you get the cash in the first place.
And this whole model is just radically different from a regular bank. Think about it. You get cash instantly. There's no paperwork. Why? Because the loan is based entirely on your assets, not on you. It's not about your job or your credit score or anything else. This just completely removes human bias and discrimination. Some people call it a true financial meritocracy. It doesn't matter who you are. It only matters what you have.
And things are getting even better. The products themselves are evolving. The first versions of these loans were kind of like a mortgage, right? A fixed term, you had to make monthly payments. But now we're seeing the rise of the BLOC, the Bitcoin line of credit. Just think of it like a HELOC, a home equity line of credit, but for your Bitcoin. It's got an open term, so it can basically last forever, and you can repay it whenever you want. It's all about giving you the most freedom possible. So when you start putting all these pieces together, you realize this isn't just about a clever loan product. This is pointing towards a completely new way to manage your entire financial life. It's what some people are calling living on a Bitcoin standard.
This creates this really cool new financial loop. Imagine this. You get paid, and it goes straight into Bitcoin. So your savings are just sitting there in an asset that has the potential to grow a lot. Then, when you need to buy something, groceries, a new TV, whatever, you just draw from your line of credit. You're literally living your life funded by your own wealth, but you never, ever have to sell your main savings asset. It's a total game changer. And the next step? It's already happening. We're talking about cards. Imagine a credit or debit card that's hooked directly up to your Bitcoin line of credit. You can just swipe it at any store, anywhere, just like a normal Visa or MasterCard. The funds are just drawn instantly. The store on the other end doesn't have to do anything different. But you are effectively living on a Bitcoin standard, perfectly connecting your digital wealth to your day-to-day life.
So when you boil it all down, this system is just so simple and elegant. You save in a sound asset, you never sell it, and you borrow against it to live your life. This is a strategy that used to be only for the mega rich, the billionaires, but now it's potentially open to anyone with a digital wallet. Which really leaves us with one big question to think about. Is this the new playbook for financial freedom?